Have you ever had a self-employed client tell you, "I make great money, but my tax returns don't show enough income to qualify"? Or maybe they are a 1099 contractor, consultant, sales professional, real estate agent, truck driver, hairstylist, freelancer, or gig worker. And the bank statement loan just is not working because the deposits are too inconsistent or too messy. That is exactly where a 1099 loan program can be a great solution. Hi, I'm ReAnn Gonzalez with Edge Home Finance, and today I want to talk about an alternate mortgage option for self-employed borrowers who are paid on a 1099. Okay, so now let's get into it. A 1099 loan is designed for borrowers whose income is reported on 1099 forms instead of traditional W-2s. Rather than reviewing full tax returns and sometimes getting hit hard by all the business write-offs, these programs typically use 1 to 2 years of 1099 income to calculate qualifying income. Now, depending on the lender, they will usually apply an expense factor to that income, often somewhere around 10 to 30% to account for business expenses. So they are not always using the full gross 1099 amount. But many times it can still work out much better than using tax returns. That can be especially helpful for self-employed borrowers who have strong income on paper from their 1099s, but whose bank deposits may not be clean enough for a bank statement program. For example, maybe they have a lot of transfers between accounts, commingled funds, irregular deposits, or they simply do not run everything through one clean business account. In those cases, a bank statement loan may get harder to document, but a 1099 program may still get the deal done. Let's go over some of the typical guidelines for a 1099 loan program. Most lenders want a minimum credit score between 660 to 680. Loan to value can often go up to 80% to 90% on a purchase, depending on credit score, occupancy, and loan amount. Debt to income ratios can often go up to 50%. Loan amounts may go up to $3 million or more with some investors. And many of these programs allow primary residences, second homes, and even investment properties. Some lenders may also offer interest-only options, cash-out refinances, and in certain cases, even short-term rental income for investment scenarios. So, who is this program really good for? It can be a great fit for a borrower who earns solid 1099 income, but writes off too much on tax returns. It can also be a strong option for someone whose income is there, but the way they manage deposits makes bank statement underwriting difficult. The big takeaway is this: just because a self-employed borrower does not fit into conventional financing does not mean they can't buy a home or refinance. It just means we need to look at the right loan program or how they actually earn income. That is why it is so important to work with a mortgage broker like myself who has access to multiple investors and alternate lending solutions. If you're a real estate agent working with self-employed or 1099 clients, or if you're a borrower wondering whether you may qualify, let's talk. I would be happy to review your scenario and help you figure out which option makes the most sense. I'm ReAnn Gonzalez with Edge Home Finance, and I'm here to help you find the right path to home ownership.